What's up guys, John New for New Finance, and today you're joining me for video 10 in a 12-part series all about brokering private money and commercial mortgage loans. Let's get into it. So as you guys probably already know, the amount of small businesses that fail every year is insane. 20% of businesses fail in the first year, 50% by year 5, and 70% by year 10. So if you're hesitant about launching a private money and commercial mortgage brokerage, that's perfectly normal. Now here's what most people don't realize, however. Even if they fail to replace their current income with this kind of business, the skill sets that they develop in this business end up setting them up for life. So in this video, I'm going to break down what to do if you decide that this business is not for you. And I'm going to show you exactly how commercial lending and private money knowledge can actually land you a higher paying role than you had before you even decided to launch. Now let's address something that most people won't ever say out loud. Not everyone who starts a commercial brokerage is going to stick with it long term. You see, some people realize that they don't like prospecting, or some don't like the uncertainty, or some decide they just want a different role in the industry. And that's perfectly fine because this industry doesn't just reward entrepreneurs, it rewards people who understand how deals get done. So even if your brokerage doesn't scale the way that you expected, you're not going to be starting over completely. All you're going to be doing is repositioning yourself, but this time with leverage. Now let's zoom out. The US commercial and real estate market is estimated to be worth over $4 to $5 trillion. Private credit has grown into a $1.7 trillion asset class globally, and projections are pushing it towards 2 to 3 trillion in the coming years. So at the same time, banks are tightening lending standards and regulations are increasing. More deals are actually moving outside those traditional institutions, which is creating a massive gap. And that gap is getting filled by private lenders, debt funds, bridge lenders, debt service coverage lenders, and non-QM lenders. There's more capital in the market right now than ever before, but not enough people know how to structure and place the deals properly. And as this space continues to grow, one of the biggest shifts that we're seeing is how quickly deals actually can get funded. And that's where today's sponsor comes in. Check out Atlas Invest. I'm going to put a link below in the description. Atlas is proving themselves to be like a freakish force in the industry right now because they're helping brokers access capital faster than ever before. You see, they're implementing the first AI technology into their underwriting decisions that I've seen. I haven't seen anybody do this yet, and it's delivering what people are calling software speed financing. And it's really allowing my brokers to have an advantage over the market. So if you're a broker looking to move deals quicker than before, Atlas Invest is definitely a platform worth checking out, and you can actually watch their last Q&A session we did a few weeks ago. I'll put a link in the description there as well. And tools like that are exactly why this space is evolving so quickly. When you learn in this business, you're not just becoming a broker. You're learning how to analyze deals, how to structure capital in the right way, how lenders think at the end of the day, how risk is priced. And that is a high value skill set. And more importantly, it transfers across the entire industry. Let's talk real outcomes. If you decide not to run your brokerage, here are 5 paths where people actually end up landing. Path 1, and the most common path, is moving to the lender side of the business as an account executive. This is a strong position because now you're sitting with the capital. Instead of chasing deals, deals are actually coming to you from brokers. You still close the transactions, but with more stability, a base salary, and a strong upside through those commissions that they're delivering. You're operating from a position of leverage instead of constantly hunting the deal down. The second path is joining an established brokerage. So instead of building your own company, you just plug into one that already exists. The biggest benefit here is simple. You keep the upside of brokering without the responsibility of running a business. No hiring, no infrastructure, no back end, and no headaches. You focus on closing the deals and getting paid, and that's it. Path number 3 is underwriting and credit. If you're more analytical and you don't love sales, this is a great lane for you. You're still going to be in the deal, but without the pressure of actually chasing it. You're going to get stable income, predictable work, and a deep understanding of how lenders actually think And because most underwriters don't come from a deal by deal background, if you decide to go that route, you're instantly going to stand out above the other underwriters that are competing against you. Path 4 is capital markets and acquisitions. See, this is where you start getting closer to ownership. You're working with the investment groups or operations and helping them structure deals to secure the financing. You see, the upside here is that you're no longer just facilitating deals, you're part of the deal. And in many cases, that leads to bonus structures, deal participation, and sometimes even equity positions in those deals. Now, path number 5 is the investor, the long game. You see, this is where a lot of people naturally end up because once you've seen enough deals, you start thinking differently about the loans. They're no longer just asking, can I close this deal? Now you're going to be asking, should I lend on this deal? That's when people transition into lending their own capital, raising money, and building portfolios, and that's where real long-term wealth is built. So the point is this: even if you don't stick with running your own brokerage, you now have a skill set that gives you multiple ways to win in this industry. And most people never get to access that kind of flexibility in their career. Now, let's say you went to school, got your degree, and your goal was to land in one of those roles. You're far more valuable with real deal experience. There's a difference between someone who studied lending and someone who's actually talked to borrowers, structured deals, solved problems, and closed transactions. That's experience, and that's what separates you from someone who just studied lending. We're in a unique market right now. Banks are pulling back. Private capital is actually stepping in, and deal complexity is increasing, which means opportunity is increasing. The people who understand this space, even at the basic level, are ahead of most of the people in the market. So here's the bottom line. You're not taking risk by learning this business. You're building a skill set that gives you more options. Entrepreneurship is one path, but it's not the only path. If you want to learn how to actually operate in this space, how to structure deals, talk to lenders, and understand how capital moves. So here's the bottom line. You're not going to be taking a risk by learning this business. What you're going to be doing is building a skill set that gives you options. Entrepreneurship is one of the paths, but it's not the only one. So if you want to learn about how to actually structure deals in this business, talk to lenders, place the loans, and learn how capital actually moves, check out the link below, and I'll see you guys in the next video.